Welcome to Investors Insights. Our topic today, tax reforms and market risk. Stay tuned as we continue to talk about these two topics in detail. I think you'll find it very beneficial. And I came out of a very positive meeting with my colleagues, Ty Miller, Bobby Norman, and Trey Booth. Each of them will be bringing perspectives on the topics we think are important to you in relation to your financial blueprint and also your portfolios. So with that, Ty, I want to start with you. You're one of the main reasons we went with the topic today because you discussed tax refunds. That's something that's very important to our viewers. So talk about that.
Yeah, we recently crossed kind of the halfway point of tax season, which is usually when we go from people receiving tax refunds to people paying taxes. So usually people that know they're receiving refunds will file sooner. And so far, the data has been really good as far as refunds go. Compared to last March, up about 19% on the tax refund side, as you can see here. And for the year, refunds have almost equaled $200 billion, which is, outpacing all of the other previous years so far. Also important to note, if you check out this chart on the consumer stimulus side, what does this mean for the consumer? We're on the 30th, but this data is from about March 15th. At the month ended around March 15th, the $20 billion increase in consumer aid would have been one of the largest non-COVID months on record. This is what's going to be, driving the economy here for a little bit, as of course we have a war in the Middle East, we have higher gas prices, things like that. This will kind of soften that blow on the temporary inflation. However, if that inflation were to last past the tax season, that's where we're going to get the true measure of how the economy is doing. So it's important to note that right now we are in the midst of a very strong tax refund season that I hope a lot of you are enjoying. I know I got my federal tax refund. The state, seems to take forever. But overall, just make sure that you keep that in mind as we move along. And again, this is kind of softening the blow for right now of higher oil prices. And it'll be interesting to see once we get through April 15th.
No, and that's a situation going on right now. As everyone is also experiencing the news, the media coverage of everything going on geopolitical, as well as nationally. And so that is more money going into the system by consumers, and that's an important factor. Bobby, this weekend, and I really appreciate our discussion in the meeting, what you did, but this weekend I had a lot of people saying to me, Greg, with everything going on in the world, how are we looking in terms of the markets, corporate earnings, those kind of things? And I thought the research you had done was outstanding. So can you elaborate on bull market, total chaos? What do we have here?
Yeah, obviously, with an increase in the volatility in the market trading back in recent weeks, like Greg said, we have been getting a lot of questions about if the current bull market that we have had for a few years is over. And the short answer is no. And I want to share this checklist that backs up our thesis that the bull market is still intact. And looking at this checklist, and if you need to pause this video to really take a deeper dive into the checklist, please do that. But there are certain things we look at in analyzing if the bull market has hit a top, and looking at the current chart as of last week, there are not any of the items showing that the current bull market has hit a top. Also notice that all these items were checked back in 2000 and 2007 when the previous bull market hit tops. And we look at things such as heavy inflows into equity market funds with intense buying, abnormally large levels of M&A activity, which we're not seeing today. We're not seeing the euphoric levels of IPO activity. Rising real interest rates are still below levels seen before previous recessions, and earnings revisions are still positive. And while the number of stocks making the new highs have slowed, it's not at a level of concern, at least not yet. So in summary, we are carefully analyzing the market pullback to see if the current bull market is breaking down or if the recent volatility is short term. So we'll obviously keep our viewers updated in the next week or two.
Yeah, we definitely will keep them updated. And again, thank you for that research. Folks, let me say this. We do the vlogs every week, but also if you're following us on our social media in terms of Instagram, Twitter, Facebook, LinkedIn, our podcast, our YouTube, the list goes on. We will be updating people as in regards to markets and what we're seeing out there. A lot of times, what's the headline of the day is not really what you need to be focused on. And so, Bobby, you did a great job looking behind the scenes there, and appreciate your work. And Trey, you and I and Ty and Bobby all know Treasury markets are very, very important. We've talked about Treasury markets this year, and we're getting ready to finish the first quarter. We talked about it all last year. So Bobby's already talked about that where interest rates are. So talk to us about Treasury markets and what we're seeing out there.
Yeah, absolutely. Thanks, Greg, and thanks, Bobby. That Bobby had a really good detailed breakdown of where the overall market is. But if you want kind of a simpler number that we watch and talk about often is where's the 10-year Treasury yield? That's a good indicator to us of are we issuing more debt than the market will take, or are we issuing less debt? So interest rates go up, that means prices of bonds are going down. Interest rates go down, prices of bonds go up. And so going back to 2023, we've been watching this 4.5% rate on the 10-year Treasury as a very important indicator, a red line for us. You can see on this chart that we had from last year that every time the 10-year Treasury really approaches 4.5% or crosses it, the S&P 500 dips down. And so why is that important now? Well, that's been something we've been watching to see, is this a sustainable bear, is this a trade down as part of a bull market, or is this an at risk of the bull market? And the 10-year Treasury is something that will tell us that how sustainable this trade down is. And as of now, the 10-year Treasury is still below that 4.5%. But you can see we've moved a lot in the wrong direction really quickly. This chart shows the 10-year Treasury yield going back to last year, October 2025. You can see here the Treasury QRA, that's the quarterly refunding announcement. That's where the Treasury says this is how much we're going to have to borrow over the next 3 months. And the market really liked that because borrowing at the end of February, borrowing was projected to be down. Our deficit was projected to fall. As Ty mentioned, there was tax refunds going out to consumers, but tax revenues were expected to be up. So the 10-year Treasury actually dipped below 4% for the first time in a year. But since then, we've moved into the Iran conflict, which has sent interest rates spiking higher. Why is that? That's because you can see here that expectations are for defense spending to go up by $200 billion. So that's a spike up in the deficit. Expectations were for overall defense spending to be down year over year. Now with a potential $200 billion increase, that will increase the level of Treasury issuance, which then puts upward pressure on yields, downward pressures on bond prices. So something we're watching very closely. We still haven't hit that 4.5% red line. Hopefully we can sustain it below that. As of this morning, it looks like yields are coming down, so that's a good sign. But just as a one data point to watch when you wake up in the morning, I know everyone rushes to their Bloomberg terminals. No, I'm just kidding. But if you want to pull in CNBC,
we may hear, Trey.
If you're looking at one number, that 10-year Treasury yield is something important, just a one data point that kind of tells you the health of everything around it. So it's something we're watching very closely as that has moved up. It's getting closer to that concerning red line. So we're watching that closely to see if any action needs to be taken.
Yeah, that is great detailed work, and it's a great indicator. And so I thought it was excellent. So thank you, Trey, for doing that. And folks, if you take all this information, digest it, tie it together, we're taking you behind the scenes of all the things we're looking at here at Five Plan Partners, as well as the high-level research that we're doing here, as well as with our research partners. So we hope you found this very beneficial. We congratulate you. You made it through the first quarter with us, and thank you for believing in us. We've got 3 quarters to go, and we're going to keep you updated. And we hope you have a great week. And just know that every day, as I like to say, and it's true, we walk in these doors at Five Plan Partners striving to see to it that our clients have a better, richer, fuller life. Take care. Don't hesitate to call us with questions and email us. We want to hear from you, and we want to be communicating with you. Have a great week.